Hola, ¿cómo estás? Estamos listos para ver un capítulo más con alguien, con Robert Kiyosaki, obviamente, Kim Kiyosaki, pero con alguien que para mí sigue siendo y es un gran maestro. Se llama Jim Rickards, y Jim Rickards aquí en esta entrevista habla precisamente de todo esto que la gente no quiere hablar, pero que está pasando. Si es que no te puedes perder a Jim Rickards, Kim Kiyosaki, Robert Kiyosaki en nuestro jueves espectacular, en donde escuchamos estos consejos y estas entrevistas fundamentales que nos ayudan a crecer financieramente. No te lo pierdas.
The good news and bad news about money. Here's Robert Kiyosaki.
And so Kim is sitting at home. And any comments for Jim, Kim?
I'm looking forward to talking with Jim because there's so much going on. And I just want to say that Jim's also the editor of Strategic Intelligence. It's a financial newsletter. It's excellent. He's also the author of the New Great Depression, which is coming out in January, which is going to be very exciting. The New Great Depression comes out in January. He's written Aftermath, The Road to Ruin, The New Case for Gold, Death of Money, and Currency Wars. You're our go-to guy. When I'm looking for answers, Jim, you're who I turn to, who we turn to.
So anyway, and the other thing is that Jim's new book, I've read every book, so I can't wait to read this book here. And it's a book on optimism, but it's called The Great New Depression. And I think the reason you want to listen about the Great New Depression is to be an optimist. What can you do? We have a hung election, and we have COVID running rampant. We have the debt of the United States going through the roof. So with that, that's a scenario we're running into today. And with that, I'll let Jim take over and hear what he has, what's on his mind. What's on your mind, Jim?
Well, first of all, thanks for the introduction, Robert. Thank you, Kim, for the kind words and mentioning the book. You're right. The book is called The New Great Depression, but it has an interesting subtitle. It's The New Great Depression: Winners and Losers in a Post-Pandemic World. And I'll emphasize the winners. There are ways to make money. There are ways to, it's not all about making money, but certainly that's on a lot of people's mind, or if not making money, at least preserving wealth or not getting wiped out. But you can do both. And a lot of social stress, a lot of, obviously the pandemic is front and center. So that's what the book about. That's what the book's about. And that's what's on my mind. It's a pretty big, I just recorded the audio book version of the book. And what's interesting is that you go back 5 years, you have the hardcover, and then maybe a year later or whatever, the paperback comes out. But Kindle sales, the ebook version was taking off. And a lot of people are saying, ebooks are taking over the world. A couple more years, there won't be any more books. It'll all be ebooks. That turned out not to be true. Kindle carved out a kind of a market share of about 30%, but it plateaued at 30%. That's important, but it didn't go to 50 and 60 and 70. It plateaued at 30%. But if you said, where's the growth in the book industry right now? It's in the audiobook sector. That's the sector that's on fire and that is still growing. And maybe it'll reach a peak at some point. There are audiobook fans out there that say, yeah, I love the book, can't wait to get it, but I want the audio version because I can listen to it in the car or on a plane or whatever. So we had a great team of producers, voice directors. I tease my voice director. I call him the Stanley Kubrick of voice directors. We did one sentence 15 times. We did 15 takes to get it just right. So obviously when you get the audiobook, you'll just hear the edited version, but a lot went into it, and I'm very happy with the production value. But of course, then there's the book itself. That's the main event. This will be the first, and this is more your question, Robert, of kind of what's going on now. What am I thinking about? This will be the first, and as far as I know, the only book that wrestles with the pandemic and the economy and the new Great Depression. There'll be doctors out there writing books on COVID-19. I'm sure there'll be economists writing books on the economy. Although the funny thing about economists, they actually, by and large, they don't write books. They write articles. They write, journal articles and technical papers. You and I and Kim are among the few people who actually write books on these topics. There are some, but they're few and far between. But this will be the only book that tackles both. And I had this debate with my editor at Penguin Random House. Great, they're very supportive. We make a great team. But she said, Jim, You're the author. We want to do this book on the economy. You go back to last March, of course, the stock market had crashed, fallen over 30% in a matter of weeks. We want you to do this book, but keep away from immunology and epidemiology. You're not a doctor. You can't. That's not your area of expertise. And I said, time out. I said, this is like asking someone to write a book about property damage in New Orleans in 2005. And not mention Hurricane Katrina. You can't do that. These two things are joined. And I said, so I'll do the economy for sure, but you got to trust me on the science. First of all, I do have 2 degrees from Johns Hopkins, so I'm not intimidated by natural science. But I've read over 100 peer-reviewed articles, journal articles, New England Journal of Medicine, Journal of the American Medical Association, Lancet, et cetera. That doesn't make me a doctor. I'm not a doctor, but if you have some background and you think the value is in interdisciplinary approaches, which I do, this stuff is accessible. You have to sort of stay with it, but I was able to come up the curve on that. And when I started the research, I thought, well, this is going to be easy. There's going to be a whole bunch of junk and conspiracy theories and just whacked out crazy ideas.
Well, Jim, if I could support what you're saying, is you said there was a good possibility a pandemic was coming before the pandemic came. So you're on the target, and so that's why I want to find out what your thoughts are today. What's coming up next? Well, no, there's a pandemic, and a lot of people now are suspicious of it.
Right.
This vaccine and big pharma and all this stuff. But we want to know, because your insights are often much more insightful, should I say, much more deep.
And I know a lot of people are wondering what's coming for 2021.
Yeah, sure. And if you go back to my 2019 book, July 2019, Aftermath, and look at pages 285 to 295. So this book is a year and a half old. The book mentions pandemic and 2 other events. It says 100% chance one of them is happening in the next 3 years. So we actually talked about pandemic and said it and 1 of 2 other things, not high probability, 100% that would happen in the next 3 years. And it went on to say this could lead to social disorder, mobs, and armed forces in the streets, which is exactly what we saw all summer. In fact, we're still seeing it in Portland, Oregon tonight. So there's nothing that's happened in 2020 that we didn't preview in 2019 in that book. If you read that book, you saw it coming. So let's talk about what's next. First of all, this is not a recession. Yeah, there is a technical recession. There was a technical recession that started in February 2020 and was probably actually over by June 30th, 2020. And the economy grew in the third quarter. So that means the recession was over. That's kind of irrelevant. We're in a depression. And depressions are different than recessions. Recessions are technical, 2 consecutive quarters of declining GDP. Okay, we had that. It went up in the third quarter. Recession's over. We're probably going into a second technical recession right now, meaning this will be back-to-back recessions, something we haven't seen since 1980, 81, in the midst of what is really a depression, which is a much longer phenomena. It will have intergenerational effects. So my expectation for the first quarter is it will be in a second recession. That's because of the outbreak, but not. And as I say in the book, Robert and Kim, the virus didn't cause the depression. It was our reaction to the virus that caused the depression. Viruses can cause pandemic and disease and tragically loss of life, but whether you go into a depression or not depends on the policy response. And the policy response was completely blundered. The book makes clear that lockdowns don't work. You got every politician from Gavin Newsom to Andrew Cuomo and Gretchen Whitmer in Michigan and governors across the country imposing extreme lockdowns right now as we speak because of this, whether you want to call it a second wave or third wave, but the infections are peaking again, fatalities are peaking again. It's actually worse than it was in March and April. So that not only is not going away, it's actually getting worse right now. The answer is the lockdown. Lockdowns do not stop the spread of the virus. They just don't work. And there's a lot of evidence, and I point that out in the book. But they're very good at destroying economies. They'll destroy an economy in a heartbeat And that's what's happening. So calling a recession in the first, well, it's really starting now in December, but the first quarter of 2021, that's easy because, hey, you lock down the economy, you're going to get a recession. Robert, people, I know the stock market indices are at all-time highs or near all-time highs. I get that. But the S&P 500 is really the S&P 6, meaning Microsoft, Apple, Netflix, Facebook, Alphabet, they call it Google, and I mentioned Netflix, Microsoft, Apple, and the rest. Those 6 stocks are 40% of the S&P, not 40% of the number, but 40% of the market cap. It's a cap-weighted index, which means that those stocks are not just disproportionately, but they are 40% of the index. So when I see the S&P at an all-time high, I say, okay, that just means, Apple and Google and Facebook are at all-time highs, fine. But what about the other 494 stocks in the index, number one? Number two, people look down their nose at small business. I mean, who gets hurt by the lockdown? It's not Apple. I mean, they're doing better than ever. Amazon, that was the other one I didn't mention. Amazon is, off the charts. But what about your nail salon, your hairdresser, the bar, the restaurant, the dry cleaner, the gas station, the boutique in your town, all those local businesses? Well, you can say, well, yeah, they're tiny, how do they compare to Apple? Well, guess what? Those small and medium-sized enterprises are 45% of GDP and 50% of all the jobs in America. And they're the ones getting shut down. How do you shut down 45% of GDP and 50% of the jobs and not go into a recession? So we're in a strange place right now where I talk in the book about the difference between perception and reality. The perception's up here. That's just where the stock market is. The reality's down here. We're locking down half the economy as we speak. That gap is going to close. It's going to close very quickly, and the stock market is going to come back down again, back down to reality. Not necessarily tomorrow. I'm not a day trader, but it will happen as the reality. I always say reality always wins. Perception can take the market to a crazy place for a short period of time, but in the end, reality always wins. Reality is going to win again. The reality is horrific from the disease point of view, and it's about to get a lot worse from an economic point of view.
Jim, what's the agenda behind destroying the economy? What is going on there? That's a really good question. It's a combination of the arrogance of the scientists and the ignorance of the politicians. There's a combination for you. So you'll see this guy Anthony Fauci, head of immunology at the Centers for Disease Control. He gets up there. He was on the Trump coronavirus task force. He's been now added to the Biden coronavirus task force. So that's how it is in Washington. You get the swamp continues regardless of who's president. But he's issued contradictory, just flat out wrong statements all along. But he likes to say, hey, I'm just an immunologist. I'm not telling you what to do. That's nonsense. Trump handed over the economy to the doctors. He was under, I say doctors, not clinicians, but these bureaucrats, these immunologists and epidemiologists. I don't necessarily fault him for that. I do a little. By the way, I think he did as good a job as could have been expected. I'm not saying anyone would have done a better job, but the politicians generally and the governors handed everything over to the quote scientists without ever stopping to think, hey, do these scientists actually know what they're talking about? I mean, whenever anyone says the science is settled, they don't know what they're talking about because science is never settled. You talk to a real scientist, they'll say, yeah, we get competing views, we ongoing research projects, we debate it, and even if we get close to resolution, we keep going and try to move. That's real science. It's not dictatorial. But anyway, the scientists, the old saying, if you're a hammer, everything looks like a nail. Well, if you're an immunologist, everything looks like a lockdown. They don't know what else to do. The vaccines are coming out. We'll see how effective they are. Hopefully they're very effective. But best case, that's going to take 6 months to a year to really have a wide impact on the population. That's the best case. The worst case is that the effectiveness does not live up to what the trials showed. There may be side effects that didn't come through in the trials because everything was rushed. I'm not criticizing the rush. I'm just saying that
don't think that this went through the review that normal medicines get. And the viruses are very tricky. They can mutate, and they do mutate. And who's to say that the vaccine for version A will be effective against version B if the virus does mutate? So we got a long way to, it's good news. I'm not saying that's bad news, but we got a long way to go on that. Meanwhile, the virus is out of control. The economy is going into a recession. Stock markets are way overvalued. They're going to correct, don't know exactly when, but over kind of 3 to 4 month horizon. That's something you can expect. And so investors should just get ready for that. Yeah, one thing, this whole Wall Street 401k IRA structure has been geared to kind of drive people into the stock market. Now, there's a place for stocks in your portfolio. I'm not saying dump all your stocks, but there's a world of investments out there. You have stocks, bonds, but also commodities, currencies, alternatives, silver, gold, real estate, fine art, natural resources. There's a whole world of investments. And most investors don't even think about all those other things. They're not always easy to put into a 401k, but you can do it, if you talk to your plan sponsor. But so many people, they're just offered a choice of, five index funds and 2 money market funds, and that's their 401k. And, I have obviously gold in my portfolio. I keep it around 10%. I mean, some people are 50%. That's up to them. I don't tell people what to do, but to me, 10% is a good allocation. And people say to me, well, Jim, that seems risky. How do you sleep at night with 10% of gold? And I say, how do you sleep at night with 90% in equities? I mean, that's a lot scarier than having a slice of gold. I would lighten up on the equity side. Again, don't go into a bunker, don't sell all your stocks, but lighten up. Maybe go to cash. Certainly gold has a place. If you don't have any gold, there's a place for 10% gold, and that could include gold mining shares. That's a really difficult area because gold mining shares will outperform gold in both directions, by the way, up and down. But where gold is in an upward trend right now, there's no doubt about that. Gold mining shares will outperform gold, but they're not all created equal. Gold is. I mean, gold is an element, atomic number 79. Gold mining shares, you really got to look closely at the management of the company. That's the differentiator. Some of these guys are brilliant. They've done it before. They have track records. They're on the right track. Others are, candidly, some of them are frauds. So how do you sort that out? Well, maybe a good, gold fund managed by an established company where they're going to do all the hard work for you, all the selection is a way to go. So there's a place for that. I also recommend big allocations to cash. And as much as 30%. And people say, well, Jim, cash has no yield. Well, actually, it could be your best performing asset in the year ahead. And here's the reason. We may be looking at deflation, not inflation. Everyone's worried about inflation. We haven't seen inflation in 12 years, or actually longer. Probably you got to go back to the early 80s before we had serious inflation. And with the Fed, the Fed has taken its balance sheet from $800 billion in 2008 to $7.5 trillion today. And most people say, oh, all that money printing, you're going to get inflation. No, money printing has nothing to do with inflation. Inflation comes from velocity. It's the turnover of money. You take $7 trillion of Fed money. How much is 7 trillion times zero? It's zero. Zero is the velocity. It's the turnover of money that gets you the inflation. If you don't have velocity, you don't have inflation. Actually, you don't have an economy. Velocity has been dropping like a rock for 22 years. It's not a 2008 thing. It's not a 2020 thing. Yes, that did take it lower. It's been going down for 22 years. And that's why the Fed money printing has not turned into inflation. It could at some point. I don't rule it out. But deflation is a bigger problem. Well, guess what? Deflation means the value of your cash goes up. You don't have a big yield on it, but it has more purchasing power because the price of everything else is coming down. So if you have, say, 2% deflation, the real return on cash is 2% because even at the same nominal amount, it's worth more. So cash also reduces volatility. So a slice of gold, a big hunk of cash, reduce your equity exposure. In real estate, it's really interesting because you guys are the real estate experts, among other things, but most people, and it's usually correct, that residential real estate and commercial real estate tend to move up and down together because they're driven by the same factors: expanding economy, low interest rates, et cetera. That is not true today. Commercial real estate is collapsing, and it's going to get worse. Residential real estate is soaring in certain areas, and I hate to use cliches, but we all know location, location, location. So there is a serious mass exodus, and I'm talking millions of people leaving New York, Chicago, Baltimore, Seattle, Portland, and California. Our friend Elon Musk just checked out. Where are they going? They're going to Phoenix, Scottsdale, Miami, Florida, Texas, some of the Rocky Mountain states, Salt Lake City, Colorado. These places are booming. So if you can get in on residential real estate, and it's kind of hard to do as an individual, but there's some well-managed funds out there. Mortgage rates are near all-time lows, but there's a housing shortage, believe it or not. And I'm talking middle to higher end housing, with the good school districts and the low taxes and all the things you want. So commercial real estate has not hit bottom. I wouldn't touch it for another year or more, but residential real estate is red hot.
Well, I'm still more not confused. I understand that's going to happen. My question for you on the financing behind commercial, like I go around and CMBS is commercial mortgage-backed securities, the same as derivatives that brought down the subprime market. That's the financing structure underneath commercial that's going to collapse. Would you say?
Sure. There's considerable ripple effect, Robert. So let's take it from the tenant's perspective all the way up to the investor in the CMBS, the commercial mortgage-backed security. So what's going on with tenants? They're not paying the rent. Depending on the area, between 50 and 90% of tenants are not paying rent right now. They can't afford it. They've been shut down. You think a hair salon or a bar or a restaurant that's closed is paying the rent? They can't. And a lot of states have put in eviction abatement, meaning you can't evict them. They may still be on the premises. They're not paying rent. So that gives a little, and I'm not making good, bad judgments. I'm just telling you what's going on. So that gives a little cash flow relief to the tenant. But what does it do to the landlord? Well, the landlord is leveraged himself, meaning, I got tenants paying me rent, but they're not paying me rent. But meanwhile, I got a mortgage on the property. So that means you can't pay the bank. So does that mean all the losses fall on the banks? Well, by and large, no, because the banks took those loans and bundled them into commercial mortgage-backed security and pushed them out there. Where are they? They might be in your 401k, and you don't even know it. Because if you bought some, you're sitting there at work and you get your 401k sign-up form or your IRA sign-up form, whatever, and you're like, I'll take a fund, real estate fund. That sounds good or whatever. They could be in your portfolio. You got to dig and look, But you're right. By the way, all this takes time. This takes a year to play out. It doesn't happen overnight. So first, as I said, the bar, the restaurant, some of them will reopen. Over half of them are actually closed for good. Everyone's like, the restaurants are closed. We'll reopen when the pandemic's over. No, they're not reopening. They're closed. The ovens are up for sale at fire sale prices. The lease is broken. The storefront's empty, and there are no tenants. That's the reality on the ground. Okay, so then it falls on the landlord who can't pay the mortgage. They may or may not go into default, probably will, or at least they're banging on the lender's doors trying to renegotiate the loans. Ultimately, it comes back to these securities, and there will be massive losses. But it could take a year to ripple through.
So let me, given the worst case scenario, let's say you either own the restaurant or you worked for the restaurant and it's shut down. So that's the worst case scenario, but that's a pretty bad scenario. You're now one of the 45% of the GDP and 50% of the employees.
Right.
Our production's been crushed.
Correct.
Okay. And then what happens is, what would you say to somebody who's either lost their job or afraid they're going to lose their job or they've lost their business? You have any suggestions of how you navigate out of that?
Yeah, it's a very good question. Going back to March, April, May, but it's even true. It was true today. You had Larry Kudlow. Larry Kudlow's a nice guy personally. He has about one of the worst forecasting records that I can think of. But they were running around. Remember the phrase pent up demand? We heard that March. Well, don't worry about the economy. We're going to reopen in the summer, and there'll be pent up demand. This is the equivalent of green shoots. Remember 2009? Everything was green shoots. We had 10 years of 2.2% growth versus 3.2% historical growth. There was $4 trillion of lost output between 2009 and 2019. There are your green shoots. It was more like brown weeds. So today it's pent up demand. But here's the thing. So during the worst part of the lockdown, although again we're now getting into lockdown phase 2, but March and April, my wife and I usually go out to dinner on a Friday night or a Saturday night. Well, we weren't going out to dinner. We were up in our farm in New England on the mountain, hunkered down just like everybody else. Well, eventually by July, some of the restaurants reopened and we went out to dinner. Well, if we had skipped 15 dinners, which we did, and we went out to dinner, we didn't order 15 meals. We ordered one like we usually do. In other words, all those meals that were skipped, that was permanently lost. There was no pent up demand. Yeah, I went out to dinner, but I didn't order all those skipped meals. That's gone. If the restaurant's even open, which in many cases they're not. So let's say you're one of the employees. What people are doing, Robert, is they're saving. Savings rates have skyrocketed. Now, that's not a bad strategy. If you lost your job, you don't want to spend like crazy. You're probably trying to pay the rent or your kids' tuition or your health care, whatever. But even people who have not lost their jobs are saying, well, maybe I'm next. How do I know my business isn't the next one to fail? How do I know I'm not the next one to get laid off? So they're saving as well. In the individual case, that's a good strategy, but in the aggregate case, it's a disaster for the economy because when you have more saving, you have less consumption, right? You get money, maybe not, but if you get money, you can spend it or you can save it. Well, if you increase savings, you're going to reduce spending. That's another reason we're in a depression. And we're going into a second technical recession right now. And that's why it's going to be very hard for this economy to dig out. And in my book, I talk about, getting back to the individual. I counsel I have 3 children. They're all the millennials. They're kind of in the older echelon of the millennials, but they're all under 40. They're all in their 30s. But when they were in their late 20s and out of college and their friends, I would counsel a lot of them. And it was tough getting jobs, in 2008, 2009. And I said, well, start your own business. Create your own job, make your own job. And they did. Many of them did, and they're having some success. So don't give up. If your job as a waiter or bartender is gone and you're having a tough time getting one back, well, think of something that people needs, even in difficult economic times. And, can you provide that, or can you join with a group in a startup situation? It's easier said than done. It's a lot of hard work, but starting your own business, or teaming up with people to provide a needed service is an alternative to getting a job.
In the new Great Depression, right, they're going to have, they had the PPP and CARES Act and all these, I call it socialism coming in. How much more is it? How much is that the only way they're going to do it? They're going to just keep printing more money?
Correct. Well, let's separate fiscal policy and monetary policy. Okay. Monetary policy is completely impotent. They are going to print more money. Well, rates are at 0. The Fed's probably not going to go to negative rates. The market could take rates negative just by paying a premium in the secondary market. That'll give you a negative yield to maturity. So you might see negative rates. In fact, I think you will see negative rates in the U.S. Treasury market, but that's as a result of premiums paid in the secondary market trading, not because of the Fed. The Fed's stuck at 0, so interest rate cuts are off the table. By the way, they may be stuck at 0. The Fed has said, maybe 2022 or 2023 before we raise rates. Try 2040. I'm serious. There's a study, it's included in my book, but it's publicly available from an economist at the Federal Reserve Bank of San Francisco and 3 collaborators from academia. They looked at every pandemic from the Black Death until today. So a 650-year time series. That's my idea of a time series, not 6 months or whatever. there have only been 15 pandemics in which 100,000 or more people have died. The two biggest were the Black Death, which is about 75 million, and the Spanish flu, which is about 100 million. They're fatalities, not cases. The cases were far higher. But there have only been 15. COVID-19 is going to end up being maybe fourth on the list. It's on the list, but it's not like an also-ran. It's going to end up being fourth. And what they show is that they say, well, what's the average recovery time? When does monetary policy and economic growth get back to normal following a pandemic of that size? And their conclusion was it takes 30 to 40 years, not months, not weeks, but years. And I experienced this myself. So I grew up in the 50s and early 60s, right? I did not live through the Great Depression, but my parents did. And my grandparents did. And I was raised with the Depression mentality, even though I didn't live through it. I lived through a fairly prosperous period, but we went from door to door with wagons as 9-year-olds collecting newspapers and tin cans. We weren't doing it for environmental reasons. Maybe it was good for that, but we were recycling papers, and there's steel in tin cans. You got the newspaper. You didn't throw the rubber band away. You put it in a jar because it was a free rubber band. So that didn't change until the late 60s when the baby boom kind of, started to, come into their own and spend money and borrow and rock and roll. But it was the psychological effects of the Great Depression lasted for 30 years. And the psychological effects of this new depression are also going to last for 30 years. So don't wait to get back to normal. We're not getting back to normal. We're going into kind of a new world.
Well, Jim, I know you have a hard stop, so I really appreciate you, your contribution and your wisdom and historical viewpoint. I really suggest people read your books. I don't just read them, I study them. I have group studies with them. Because each time I study, I get a whole nother insight I didn't get just from reading it. When I discuss it with a friend, did you see this, you see that? And, what you do is you open people's minds so they can see a different world. So I really appreciate your contribution to society, but sharing what you've learned over these years. So thank you again, and we'd like to have you back again.
Thank you, Robert. Thanks, Kim.
Yeah, one of the things I really appreciate about Jim Rickards is that, everybody's looking like, what do I do? What do I do? And he tells you what to do, but he's giving you the background and the bigger picture of why you do this. It's not like, okay, just liquidate some stocks. The reason why is because you want to hold cash. The reason why is because and he's got such a depth of knowledge from all his experience and all that he's done. So that's what I appreciate. I appreciate him saying, here's what you can do, but more importantly, why this is how it may play out.
And his book is called The New Great Depression. His website is jamesrickardsproject.com. Please read his books, because he talked about every 1,500 years there's this major thing that happens. We're at 1,500 years right now. So that's why if you think happy days are here again, I think you're sorely going to be disappointed. Anyway, with that, the best thing to do right now is prepare for the future. And I would follow what Jim Rickards says. So thank you all for listening to the Rich Dad radio program. Again, financial education is the best way to protect yourself from what's about to happen and is coming right now. Any comments, Kim?
No, I just stay tuned and pay attention, be aware, and just know, as Jim said, we're never going to go back to the way it was, because we've got probably 30 years of a new world coming on. So don't just be flexible, be aware, pay attention, get educated, learn, do something.